Hello, hello. How's it going, everybody? Good morning, good afternoon, good night, depending where you are in the world. Can I get an audio and visual check in the Zoom chat as well as the YouTube chat? The hyenas, the YouTube hyenas. Welcome to the Capital Hungry London trading stream. If you guys are new here, don't worry. We're going to go through the nitty gritty of the stream rules and the setup and how we do our best to provide value here. Okay. First things first, please guys, take 2 minutes to read the YouTube description, this channel's description right now, this video's description, as well as the stream reminders that are going to pop up on the screen for the YouTube audience. Sorry, I'm just getting a little bit sick under the weather. This Canada weather's been going up and down like crazy, from cold to hot. But anyway, stream reminders. This is not direct financial advice, but feel free to ask questions about technicals, fundamentals, and overall markets. Do not ask for direct signals. Any questions about the Capital Hungry private service, please keep it out of the chat and just go to capitalhungry.com or message me on Telegram. You can find my contact information, free resources like the YouTube, news, Twitter, Telegram analysis chat, all on the screen there, on the layout itself, as well as the stream reminders and in the description. And I'm also going to be showing you guys those direct links right now. Okay? So read that. Now, take your time and go through the Capital Hungry YouTube channel, where you have a year's worth of technical and fundamental information, as well as trading psychology. You know nobody can top this. You know nobody can match this. If you're new, this is your ticket to actually understanding the financial markets from a fundamental and technical perspective. Don't forget the Capital Hungry Twitter. Remember, I actually show you guys trades, live accounts, no FTMO. You know what I mean? I actually show you guys the full slip, wins and losses, posted on the Telegram, posted the trade analysis, same trades as we do in the live streams. We actually show you guys the process. We actually try to motivate everybody in the gang around us to be better physically, financially, and mentally. And you got all these free resources as well. The Capital Hungry News Twitter, the Capital Hungry YouTube channel, and the Capital Hungry free Telegram analysis channel. Make sure you guys check all that out. All right. Okay. Now, before we jump into our fundamentals and then technical breakdowns, as we do analysis across our main pairs, such as gold, GJ, GBPUSD, Euro USD, USDCAD, and US30. First, don't forget that we are all retail manual traders. That means that we constantly have emotions intercepting our decision-making process. We have to keep each other in line, keep each other smart, and as emotionally neutral as possible. So make sure to follow your trading plan, follow your risk management plan. Yo, that's the Twitter? No, it's gone, bro. You guys can't. Oh, it's repeating. It's the yo. I just worked out. I just worked out. All right, we good? I was fucking working out, man. I was trying to motivate my mans. I was going hyena mode. We all go in hyena mode sometimes, you know? Shit, man. You guys caught me slipping. Everybody catches a roast once in a while. We all catch the roast. Fuck, you guys caught me slipping. Alright? Anyways, guys. Oh, shit. Alright. That set the mood. Okay, alright. Focus. Stay smart. Follow your trading plan. Follow your risk management plan. Focus on the long-term vision. Keep emotions out and avoid crashing your account. All right? You have tons of psychology webinars on the Capital Hungry YouTube channel, so don't forget about that. Now, on your screen for the YouTube audience, you're going to see some recent macro fundamental points. We've seen some historical repetition with the seasonal changes that come from the sell in May, go away effect, where we always see equities pull back higher than not just based on the historical repetition and the short-term fear that's also developing around inflation increases that we've noticed too around different countries. We know that all this stimulus that the central banks have printed out to help flood the economies and equity markets has a cause and effect, where the effect is an increase in inflation and an increase in cost of goods. How we confirm that is with our CPI figures that we've seen across the board from the US, UK, Canada, Euro, which is all showing a constant increase. And we can see that every time the Federal Reserve or other central banks try to downplay the inflation increases as we're edging closer and closer to hyperinflation. Okay, that is one of the main reasons why gold has also been so bullish, and I'm going to explain that during our gold analysis and breakdown. We also noticed the crypto crash. Who warned you guys about the crypto crash? Huh? Who was sending you guys the tweets about the crypto crash? If you guys follow the Capital Hungry Twitter and you guys saw me make money on that as well. Where is it? Where is it? Where is it? I'm not going to play that video again. Don't worry. Who told you guys about this? Let me get this out of the screen. Who told y'all? Who told you guys May 14th? I'm doing a big short on Bitcoin. Who was giving you guys the full breakdown? Who told y'all? Who told you don't listen to these crypto gurus? Who told you crypto markets coming up May 14th? Pigs get slaughtered. I was telling you guys. Oh man, I'm handsome. These guys say I don't show my face. Alright? Anyways, so we're seeing those global inflation figures rising. We're also seeing, as COVID tensions are starting to simmer down and we're getting an increase in vaccinations and economies opening back up, investors' attention is more being focused on Middle Eastern tensions that are arising, as well as political wars going on, such as going back to trade war focus. But macro market optimism is still active when we look at our safe haven indicators, such as the US dollar safe haven currency, Japanese yen, as well as the fear and greed indicator being the VIX, and our global stock markets, which I'm going to show you guys now. So when we see that global stock markets are still bullish across the board, you have to understand that we have to look at the last higher low points when we're looking at our stock markets and equity markets from every single region, and understand that these pullbacks that are happening are from new all-time highs that have been peaked on every single region's respected stock market. So we know that that central bank support is still very much active, and we know investors are still very optimistic about economic recovery. That's why they're pooling their money into the stock markets. That's why the stock markets in these various regions are back above pre-pandemic levels. That's one of our first signs to understand that macro market optimism is still active, because even though we have had some of these pullback moves across global stock markets and equities, where are those pullbacks coming from? That's what you have to ask yourself. So where are those pullbacks coming from? You know, on Capital Hungry we do these quizzes. Make sure everybody's sharp and learning. So where are these pullbacks on all stock market indexes across different regions coming from? They're coming from either previous highs, new highs, or the all-time highs that were peaked by buyers. So an overall bullish market structure and bullish trend, as they print new highs and buyers extend in the market, you have profit taking by buyers that creates a pullback stage or a correction stage. what you have to understand and identify is that pullback breaking overall bullish market structure in terms of your higher lows and higher highs. So when you're identifying that pullback, you can see that you would have to break these price points and break below there to have a break of bullish market structure across stock markets in all regions. Do you understand? Right now, all we've seen is the stock markets have had a decline with that historical repetition of sell in May, go away, as well as short-term fear increases with hyperinflation risks and the CPI figures across different countries being a lot higher, which I'm going to talk about impacting on gold. But the pullbacks are coming from all-time highs or previous highs. So that transaction that's creating this pullback and showing us that technical correction as we view on the chart is simply profit taking by buyers, sellers entering the market to relieve the buyers out of the market and having a pullback to bullish structure in a higher low point to potentially continue us right back up as long as markets are optimistic and central bank support still stays active. Okay? So that's our first indicator, whether you trade the stock markets or not. It's an economic indicator that shows us either optimism in the markets or fear by investors and smart money. When global stock markets are still bullish, as well as our basket of safe haven currencies standalone are bearish, what is your safe haven currencies? Next quiz. What are your safe haven currencies and what are safe haven currencies used for? Gold is a safe haven precious metal. What is your basket of safe haven currencies? So, your safe haven currencies are the Japanese yen, the US dollar, and the Swiss franc, JPY, USD, CHF. Okay? The point of these safe haven currencies is due to their historical value and their central banking debt structure for the Japanese yen, the offshore banking that goes on, and the financial support for the Swiss franc, and the fact that the US dollar is the global world's reserve currency. Okay? Meaning these currencies are usually only primarily bullish when there is economic uncertainty or market fear. Understand? Otherwise, when markets are optimistic, money is being taken out of the safe haven currencies and going into the basket of risk currencies, usually that are brought down to a low after a crisis or economic crash, and going into the stock markets, which is rallying with the support of the central bank. How is it rallying with the support of the central bank? Well, during a time of economic crisis or crash, the central banks increase their money supply of their respected currencies and they start to flood their respected country to support the economy. They do this through government bond purchases to give the government money as a loan so the government can use it for infrastructure development and to recover the economy from jobs and other aspects as well. They purchase stock market ETFs to inflate the respected stock markets to ensure stock markets in those countries do not crash, because if stock markets crash to a value of zero, all of those corporations in the various industries in those stock markets, which is across the world, would go bankrupt, and that would be a complete depression, global depression. The Federal Reserve, the central banks, would never allow stock markets to fully crash. They allow for crisis and they allow for drops to certain specific price points, but they jump in and buy those price points at the lows as a fire sale. This is just economic cycles, market cycles, and historical repetition that we've seen from 1923, 1980s, 2000 Y2K, 2008 financial crisis, 2020 pandemic. The political parties involved, the catalyst for the crisis always changes, whether it's a war or a pandemic or a financial crash or blaming on the innovation of technology with Y2K, or over leveraging traders and loans out and mortgages and credit, which was the 1980s crash cause. regardless what the catalyst is, the financial impact is the same and the central bank support is the same. So as long as the central banks keep interest rates low, as long as they keep their quantitative easing up and continue supporting their respective economies, you're going to see those basket of risk currencies like GBP, Euro, AUD, NZD, CAD, they're going to be primarily bullish against safe haven currencies. Okay? And Kroos is a retard in the chat who's trying to talk against a fundamentalist right now. He says, I sound like a delusional bull. The Fed's job is to protect the dollar, not the stock market. Okay, let's dissect and break down your theory, and let's confirm my theory. Everything I just said, the fundamentals, let's confirm it technically. How come ever since even farther here, how come ever since March 2020 during the pandemic crash, when the Federal Reserve increased the value of US money supply in the markets and heavily started printing US dollars, why did the value of the US dollar drastically drop and decline as you had an increase in supply, a decrease in demand, and that money went into heavily support the stock markets? So how come this was the pandemic crash? This was the pandemic crash surgically down to 18K. The same time the US dollar reversed and went bearish as the Federal Reserve increased the money supply, the value of the US dollar drops. But all those dollars are going in to help the US economy, whether it's to be stimulus checks for the people or whatever it is, right? So there is your technical confirm of how after the pandemic crash, when the Federal Reserve came in, interest rates were kept low, and then they started increasing the US money supply and printing more US dollars. You saw that flood into the US stock markets, and every single country's respected central bank did that on the same. Right? Now, what is another confirm of this? Well, we have seen that CPI figures, we have seen that consumer price index figures and inflation are heavily increased we have seen that consumer inflation is the largest since 2008 because the impact of all this printing that the Federal Reserve has done of the US dollar in increasing the money supply of the dollar to support the stock markets and to support the respective country, but really just to inflate the stock markets, leads to an inflation in the cost of goods for consumers, because you have a higher supply of the US dollar and you have a lower demand. So for the feds to get back that money, you have an increase in the cost of goods. Year over year consumer price index, which is consumer inflation, was the largest increase since the financial crash of 2008. Right? So the central bank support is still very much active. Our safe haven currencies are still very much bearish, and that macro optimism is still holding. So we can see the dollar has been continuously printing lows and primarily weaker. Japanese yen has been weaker, and the volatility index has also been bearish. But one of the reasons why gold, a precious metal safe haven, has been so bullish fundamentally, and why we have been playing this technical structure with the double bottom at 1680 lows, and then this bullish structure which has been respected with buyers continuously printing highs and only having pullback phases or consolidation phases. What is a fundamental bullish confirm for gold? What, besides it being market fear, what is another reason why investors pool money into gold? Quiz time. Well, two things here, both good answers, okay? One, which we trade gold against the US dollar, and the US dollar has been primarily weaker. Two, investors hedge against increase of inflation by pooling money into gold. So as we've had CPI increases, which is confirming an increase in a massive increase in inflation due to the US dollar printing, they hedge against this inflation increase by pooling into gold. That's why who's been following the capital hungry streams since April, where we have been calling buys from 1680, 1700, 1720, 1780, 1800s, we have had zero reason, fundamentally or technically, to sell gold as long as the dollar is weak and as long as we have an increase in inflation and overall higher time frame bullish market structure still being respected. Here. Okay? Now, let's do a higher time frame quiz before we go back to the intraday time frames. We're going to go step by step here. We're going to explain the fundamentals behind the technicals. What are the 3 to 4 main reasons why gold pushed up into all-time highs? And then what were the main reasons for this correction and higher time frame pullback here? And then, what was the reason fundamentally for the continued respect to the higher time frame macro bullish market structure and previous price sensitivity area to the left? What was the reason here? First, let's start here. And don't worry about trades and stuff like that. We got like 2 hours. Okay? All right, so first, what were the main reasons why gold during the start of 2020, after the pandemic, obviously, why did gold go from 1720s and inflate to 2075 new highs? Okay, number one here. Ready? 1, gold is a safe haven precious metal. So number one, you had massive fear in the markets. Okay, you had massive amounts of fear in the markets and you had a weaker US dollar. So that's the quick, easy one to understand. You had a decrease in interest rate cuts from the Fed. Note this down. You had a decrease in interest rate cuts from the Fed, which is a fundamental confirm for gold. You had fears of economic collapse, which pools money into gold. You had a weaker US dollar at the time because the Fed started to increase the value of the US dollar in the markets. And don't forget physical gold. The central banks, governments, countries, they hoard physical gold. Gold spot value, digital gold spot value is based on the value of physical gold. When we had the pandemic and economies and countries shut down, we also had gold mines and facility areas shut down and the supply and delivery of gold being limited. So physical gold supply was limited, but physical gold demand was super high. So 1, US interest rate cuts. 2, weak US dollar. 3, fundamental market fear and gold is a precious metal safe haven. 4, demand of physical gold increasing through the roof. 5, supply being limited because all gold mines and production areas were shut down. That's why fundamentally gold was so bullish and broke above previous historical highs and peaked new all-time highs. Now, from this all-time high that was peaked by buyers, we had this slower corrective pullback structure. What was the reasons for the pullback? Well, months later, after the pandemic fear was priced in, what did we get in the markets to help combat the pandemic fear? We got a flood of vaccine headlines and a flood of vaccines entering the market. We got the initial pandemic fear being priced in and digested by investors, and economy starting to open back up. So the physical supply and demand of gold started to regulate months later as economies opened back up, and you had the production facilities and gold mines open back up and the delivery go back to normal. And then you had Henry, I just gave that reason, you fucking dumb retard. Spell my name right too, Henry King, you dumb bitch. Anyways, then you had COVID cases starting to drop, economies opening back up, all the production areas and facilities opening back up, supply and demand of it being regulated, and you had the vaccine rollouts. That was the reason for the pullback. But why did gold still respect this higher time frame bullish market structure and go on this extended bull run since, and still respect this bullish structure as well? Why? What was this third phase here? One, this on a fundamental macro perspective, on a higher time frame perspective, is a corrective pullback to a better, higher time frame demanded price by institutions and banks after peaking all-time highs here. Two, the cost of the heavy increase of US dollar printing led to a massive increase in inflation, which is a bullish confirm for gold. Okay? So now on gold here, you can see, with all that being said, after having this technical double bottom at the retest of that higher time frame bullish market structure we just looked at, right? After breaking out of these liquidity zones and only having consolidation phases and pullback phases, as we consistently have buyers extend into new highs, has there been any reason for us to sell gold? Fundamentally or technically, since April, has there been any reason for us to sell gold and counter trend trade or fight the trend? Right? Exactly. So all you have to do with gold, and the same thing we've been running in Capital Hungry, the same thing that made me another 20K this week, where I showed you guys the wins and losses I took, and that it's a live account, and that it's not FTMO, is just patiently waiting for the break of the consolidation phases or taking the pullback trades. Pullback buys, breakout of high buys. Consolidation, order block buys. Especially alongside our higher time frame 12-month, 3-month historical levels, and as we broke above corrective structure here. So the trick, you guys really have to take notes, and you guys really have to understand what's going on here in the market phases. The market, like I told you guys, only moves up in two fashions. When you have the fundamental catalyst behind it, you get pullbacks, highs printed, and then continuations to the upside, or you get pullbacks, a high printed, a consolidation phase, then a continuation to the upside. The issue is, if you trade only technicals, if you trade only indicators, these pullbacks based on the indicators' mathematical equations usually tell a lot of people, based on RSI changes, based on MACD, or based on EMAs, that a reversal is coming. Or technical only and indicator traders think this consolidation is a resistance forming. This is how retail traders get trapped. They don't understand the fundamental sentiment. They don't understand the correlations to use. They don't understand the overall structure and phases in the market. So their indicators are telling them, hey, it's a reversal coming, a top is formed, hey, a resistance is forming, but the fundamentals and the market structure and the price action are saying something else. We trade the fundamentals, raw price action, market structure, buyers and sellers strength. So now, quiz time. What phase is gold in? Is gold in an impulsive phase? Is gold in a corrective order collection phase? Is gold in a pullback phase? Okay, now, this is the real test and quiz. That's going to test your knowledge and everything I've told you guys. So you guys are correct. It's in a corrective phase. We've had a new high printed by buyers. We're just starting to consolidate and create an order block at the highs. It's not a resistance. It's not a sell signal. It's not a reversal sign. No. Understand? We are just in a consolidation corrective phase after having new highs printed by buyers. Fair? Now the next quiz. What price point would we need to break on gold, and what would we need fundamentally to show a shift in bullish structure and to show seller strength on the higher time frames and intraday time frames? No, not 1845. What price point and what combination of events would we need to show us a break of the bullish structure and sells coming in? What price point will we need to break technically? What would we need with the US dollar potentially, or maybe vaccines, or optimum? What would we need? Now, this is the issue. A lot of people think a break of the trend line is a break of structure. No, remember, market structure is based on higher highs, higher lows, lower highs, and it's based on significant price points. A trend line is simply a visual representation for us to look at structure easier. We would need to break below the last higher low price point that led to the higher high, which is 1810, 1815 area. You would need to have technical breaks below here because this is the last higher low point that went up into new higher highs. You would need a break below 1810. You would need continued US dollar strength, and you would need vaccine optimism. For me to safely sell gold long term with the fundamental and technical confirms, we would need to break below the last higher low point at 1810, where this was the last price point that extended into new highs. That would be breaking bullish structure. We would need to have US dollar strength as its gold against the US dollar. And we would need to have actual overall vaccine optimism too, which is showing a rebound in US economy, which would have US dollars demand get picked up in the short term from its lows and gold dump lower. Other than that, I have had no reason to sell gold. I let the consolidation phases happen, wait for the breakouts, or play the bottom order block of the consolidations. Meaning like the buys at the support levels, the buys at the breakouts of the highs, the buys at the pullbacks. And nobody, capital hungry, tell them, have we been selling gold? Or have we only been riding buys? Tell these guys. My aristocrats. How long have we been riding buys, scaling in? There's actually Eric Eric has 2,000 pip buys. One of our CH members with complete resilience and the patience of a... Where is this guy? Where is this guy's freaking trade, man? Eric over here? Where was that? It's somewhere in Banter here, right? Right here. See? He has those buys from 1680. 2,000 pips to 1880. Just because we've been riding the buys. There's been no reason to sell. It's trending. In Capital Hungry, we scalp, we intraday, and we have swingers as well. It's no joke here. It's no joke here. 1680. And you guys see me play it in my fashion. Live account, trades, profit, 24K in the week. But you guys see me show you my losses, controlled stop loss losses. Full slip whenever I get that profit going. Whenever I'm trading, you guys can go through the Capital Hungry Analysis channel. I've been scalping the buys up, playing the buys up. The only time I took a sell and was a retard emotionally, it cost me a loss there for 15 pips. When I decided to counter trend trade and be a retard and had an emotional fuck up, it cost me 15 pips and it cost me $1,500. But other than that, gold buys for the week. Last week, the previous week, gold buy. When I made 40K, what do you guys see on here? Where is it? Where is that one? That was the start of May. So much value. Daniel Savage's lawyer. When I made 44K, gold buys, gold buys. Wins, losses, it's all shared there. The previous week, buys. Obviously, we all make emotional mistakes. You try to be a hero sometimes. You try to counter trend trade, but it's all about the risk versus reward. Keeping your losses small and milking your wins. Yeah, you guys see that vein? But anyways. Okay, so Kurt Press saying, what a fucking loser. Alright, so when we're looking at gold here, all I'm looking for is on the hourly time frame, if we can get this bullish candle before London open to close above 1876 key level and break above these candle body highs, as we already had the daily candle make a lower wick here and double bottom at our price sensitivity area where you guys saw me catch those buys at Asian. You guys saw me catch yeah, those buys at Asian. Oh, that was the Bitcoin as well. But you guys saw me catch those buys at Asian. If we have bullish candle closures above 1876 at London Open, I'm looking for a quick lower wick formed, a retest, and riding buys to 1883 and potentially higher. I'd only be looking for gold sell scalps or sells below 1855. Even if we could do a deeper retest to 1862 again buys, 1876 buys, 1883 buys. And then we're going to check our lower time frame 1 minute price action for entries. Okay? Any questions about gold analysis? No, Bitcoin sell-off was not suspicious to me. I showed you guys how we were calling it since the start of May. What is the best site for fundamental news? The Capital Hungry News Twitter. Yeah, you like that gold dissection? Trust me. Different breed and capital hungry. All right. So you guys good? You guys good with the gold analysis? We're going to be patiently waiting for our lower time frame confirms to buy gold with the London volume as long as we retest our price sensitivity areas. Now, GJ, when I was explaining to you guys the fundamentals of the central bank support, this was the pandemic crash. Then the central bank started to flood the markets and you had equity markets rebound and you had a country's economy start to open back up with vaccine optimism, economies opening back up, and the initial fear being digested. What have you only seen happen on GJ? Has there been any reason, fundamentally or technically, when the safe haven currency Japanese yen has been bearish, fundamentally, when the British pound has been bullish with Brexit optimism, as we've had a potential Brexit deal, we've had the rebounding from the historical lows, where this low price was the same low price as the Brexit crash, the same low price as the 2008 financial crash. Okay? Has there been any reason fundamentally or technically to sell GJ in the last 8 months? Or do you only have the same thing we were discussing on gold, where you have pushes to the upside, pullbacks to demand areas and continuations up, or pushes to the upside, consolidation zones and continuations up? Has there been any reason with the weakness in Japanese yen, when we looked at the JXY index standalone, has there been any fundamental or technical reason to sell GJ? Or is it best to patiently wait for the pullback phases and profit taking by buyers to take place, identify the demand area of interest, and then start to scale in buys back to highs, or wait for consolidation breakout above highs? Right? You've only had continuous highs printed by buyers, profit taking happen at these highs, failure to break overall bullish market structure, or consolidation zone continuations, highs printed, pullback, highs printed, pullback, highs printed. We do have the potential for a pullback. Now, when we're looking at GJ now with the same idea, what is this price area for GJ? What phase are we in? What has been printed? And what's going on fundamentally? GBP buyers against safe haven currencies have printed new highs on GJ, right? As they've printed new highs, we start to enter a corrective stage where buyers are starting to take some profit out of the market, and now we're in a corrective stage. So I can only expect a deeper GJ pullback if we were to break below 153.500 ppl, which is also roughly around previous high price points, and the order block consolidation lows area. Other than that, this demand area still being respected, where we could continue to bounce, break above 154.8 and have buyers print new highs. I would only see a pullback stage on GJ, or a pullback potential on GJ, if we break below 153.500 technically. And even then you can see this intraday bullish market structure still being respected as well. So now you can see we're respecting 153.500 ppl. It's the previous price sensitivity area that did push us into new highs. At these new highs, we had this profit taking and pullback by buyers. The daily candle still ended up closing with the rejection and weaker, failing to break those price sensitivity areas to the left. Now we have some lower time frame corrective structure on GJ, where if we can break above 154.200, then we can start to look to scale in buys with safer buys above 154.8. I'd only be looking for safe GJ sells if we saw the UK stock market start to decline, any Brexit negativity when we look at our news terminal through London session, any market fear that comes from Middle Eastern conflict tensions or regarding COVID, and we would need a break below 152.500 for me to take sells on GJ. Otherwise, I'm primarily looking for pullback buys, break out of 154.200 buys, and break above 154.800 buys. Does that make sense fundamentally and technically? Everything makes sense so far for gold and GJ, as we're going to be patient. So remember, GJ still in a bit of a range, and our US dollar pairs are in a bit of a range. We want to be patient with our confirms as we come to our areas of interest and our price points of interest based on this preset analysis we've done. We want to be patient and wait for those execution points, then start looking at the 1 minute time frame for entries for scalps and intraday trades if price action, volatility, and volumes allow so. All right, we're not going to rush any trades. We're going to be patiently waiting for those price points of interest. And remember, you can always rewind. You can always rewind the stream as well to see the analysis so far on gold, the fundamentals, the technicals, as well as GJ, technicals and fundamentals. No fibs, no indicators, raw price action and market structure, buyers and sellers' strength, micro and macro economics and fundamentals, and that's it. All of those fundamental concepts being confirmed by the technicals as you use those concepts hand in hand, going all the way from yearly time frames down to 1 minute time frames. Okay? You guys tell me what other stream does it like this. But anyways, let's go to GU now. Let me have a drink of water here. Yeah, we're not just going to be entering willy-nilly. We're not just going to enter some random one-to-one risk versus reward ratio trade. For anybody who's asking questions about the concepts that I'm using and discussing within this stream, I'm not ignoring your guys' comments, right? But you guys have to understand that this stream is to share live analysis trade ideas and then look for potential execution points. I don't have time to explain those concepts over and over and over again, but you all have the time and effort to go through all of these capital hungry webinars over the past year. Scalping 101 series, 4-part webinar, hours long, psychology webinars, evolution of a trader, fundamental concepts, oil breakdowns, gold breakdowns, Dow Jones, central bank corruption, higher time frame technicals, all these live streams which are 3-4 hours long with 9,000 views, 5,000 views. So understand, I've been involved in the market since 2017. I've gone through 2 years of trial and error, burning through my initial salary, 50K in the markets, from my paychecks, burning it into the markets, trying to over leverage, over trade, get rich overnight, be a full fucking hyena retard. And then I finally started getting profitable in 2019 onward, and through that entire process, I've shared everything I've learned technically and fundamentally. You guys need to do the same for your chart hours and effort. Look at this shit. Look at this shit. But seriously, how many fucking Forex trader YouTubes you go to where it's stupid ass clickbait, it's fucking some dumbass signals, some stupid ass shit about flipping a $300 account to 10,000, some marketer showing the car he's in or the house he bought, some people showing some shit on TradingView after the fact or doing replay challenges. No, we got live trading streams. We got market update webinars, full higher time frame technical top-down analysis on main pairs, psychology webinars, everything. I traded Bitcoin shorts again at Asian session. What do you mean? Oh man, I'm pretty handsome. What do you mean? I was taking we're in Bitcoin shorts today at Asian. I milked it down with the Asian continuation for the daily partial wick fill. We do what we say. It's a sell, baby. I scalped it again at Asian. It's all in the Telegram. Alright. So there you guys go, man. Tons and tons of fucking GBPJPY fundamental. Look at this shit. A full fundamental and technical historical analysis of GJ tech, everything. It only gets 1,600 views. I gotta like my own videos. It's so sad. You know who gets all the views? You know who gets all the views? The marketers. The marketers and the scammers. They get all the views. I get all the trolls and hate for some reason. I opened a service with Capital Hungry. That's genuine. I share all these videos. I do all these live streams. And you guys just fucking troll me all the time. All you guys do is fucking troll me. I gotta like my own videos with a different account. My own personal account. And then my Capital Hungry account. I gotta send myself 2 lights. That's how sad it is. But yo, anyways, I'm just trying to tell everybody who's new, who hasn't put the effort in, just go watch these videos. It'll fucking change your perspective on the markets and you'll learn so much. You know what I mean? You'll learn so much. Free news Twitter too. Free news Twitter, news headlines, market updates, trade ideas, me flexing, my jawline. Oh, that's pretty fucking sharp. No, I'm kidding. If I wasn't confident, then I wouldn't be able to do live streams. You know what I mean? I wouldn't be able to give people information. So I gotta have some confidence and exert that confidence. So I gotta have good energy and confident. I have to have confident energy and show you guys I understand what I'm saying and prove it to you guys with the process, the trades, the analysis, the information. And then you guys can feed off that energy as well. But yeah, news Twitter as well, you know what I mean? So you got the news Twitter, everything. A lot of free resources, the Telegram analysis channel. Okay, so right now, GJ still respecting this lower time frame corrective bear structure. We're only taking buys if we come above 154.200. Gold, we're only taking buys if we come above 1876 or if we get another retest at 1863. Right now, we're just ranging. GBP USD. Now, let's get back to the focus. Remember I was just explaining to you guys about the basket of safe haven currencies and then the basket of risk currencies? What do you have here? What do you have going on here? What do you have here? What against what? So the US dollar is your safe haven currency and GBP is your risk currency. So this has the exact same structure as GJ. If you go to AUD/JPY, if you go to NZD/JPY, if you go to AUD/USD, NZD/USD, Euro/JPY, GBP/JPY, GBP/USD, if you guys zoom out, all of them look the exact same in terms of the macro market structure due to the fundamental concepts I'm telling you guys. Do you understand? Go to your charts right now and be mind blown right now. Go to EJ and GJ, AJ, NJ, pull them all up next to each other. They're going to look pretty much the exact same. And tell me if I'm wrong right now. I'll give you guys 5 seconds with the Jeopardy timer. That's what's going to confirm our fundamental concepts of how money in the markets is flowing out of safe haven currencies and going into risk currencies. And you confirm this across the board when you look at your dollar, you look at your Japanese yen, and you look at your Swiss franc. They're primarily bearish. And then you look at your equities, they're bullish. And now look at all your risk currencies against safe haven currencies. Line them up quickly. Tell me what you guys see if you just zoom out on the 4 hour and the overall structure. Don't you see continuous bullish structure? Buyers printing highs, pullback phases, consolidation phases, continued highs. On any of those pairs, has there been a reason to sell? Makes me so angry. Has there been a fundamental or technical reason on any of those pairs to sell? Even if I don't trade AJ, with the central banks doing the exact same things for their respective countries, with the vaccine headlines being the exact same, the optimism being the same, the safe haven currencies being weaker, what is the structure on all those pairs? I want you guys to show me right now, and that's going to confirm the fundamentals. AJ, EJ, NJ, CJ, CAD JPY, GJ. USDCAD is going to be the inverse, obviously. It's going to be bearish, right? Because you have your safe haven currency against your risk currency. NU, AU. They're all the fucking same. Aren't you guys having dots getting connected in your brain right now? Aren't you having like aha moments? Like, fuck, what the fuck? Holy shit. It's crazy, right? Go look at them. USDCAD is going to be the exact inverse. Because you have your safe haven currency against the risk currency. Keep in mind, guys, 4 minutes till London Open. And we're going to be patiently waiting for our confirms. We're not retards like JP and Daniel Savage who enter trades at 1 a.m. and just deal with ranging markets. They're going to get lucky if the buy goes there, take profit. You know what I mean? They're doing a 1-to-1, 50-50 gamble, roll the dice scalp. As they're pointing guns at the screen. As JP's got a fat face. As Daniel's trying to shit on Raja and us, but we actually show our trades. We actually show information. We actually give back value. We actually do analysis. They're just playing straight roll the dice there. They got no fucking clue what to wait for, what to look for. That's why Daniel had 50% of his clients leave. Trust me, man. These guys are clowns. Daniel's forehead shinier and more brighter than his future, fam. Trust me. Okay, so when we're looking at the overall structure on GBP USD, as the US dollar has been fundamentally bearish due to the increase of Federal Reserve printing and the decrease of US dollar value, as we have buyers continuously print new highs with only pullback phases or high consolidation phases, has there been any reason for us to sell GU? Or should we only wait for pullback buys and break out of consolidation buys? Focus, Haihiras. Focus, focus. Get back on focus. Listen, I don't know if you guys realize this or not, because a lot of people don't have common sense, but Daniel has 100,000 Instagram followers. JP has 50,000 Instagram followers, and they got 200 dislikes on their stream. And they got 200 viewers on their stream. They're just fake-ass marketers. Alright? So let's get back to focus here. So now, on GU, I'm actually looking at this potential support being created. And if we can break and retest above 41300 area, that's the only way I'll be looking for GU buys as long as the dollar remains weak and back above 41500. I don't want to play any corrective pullback sells. If GU drops, I'll just let it drop and set up better risk versus reward buys at the retest of bullish market structure in key level 1.40 flat. Okay, makes sense to everybody? Now we've just had London open up. We can see the hourly candle does not have a lower wick yet. We're just going to be patient and mark off this order block and consolidation zone on the lower time frame here. It's just London open. Don't rush anything. Yeah, Ted's probably pissed at though. Ted's probably pissed at Daniel because he's talking bare fake shit, lying about Raja, Ted, and I. You know what I mean? As they buy followers, as they have no one watching their stream, as they do no analysis, as they do fuck all. You know what I mean? GJ, we're gonna buy only if it breaks above 0.200. We're gonna watch the price action on the 1 minute for entries. I'll walk you guys through it step by step if we get those confirms. Listen, I don't know if you guys notice, every single stream I do, nobody else talks on the Zoom. I don't need guests to help fill up space. I don't need other people talking. I talk to you guys for 2, 3, 4 hours straight about the markets. Whether it's technicals, fundamentals, psychology. I even told Raja and Monty, I was like, I don't got no background elevator music. I'm busy talking. I was joking. You know what I mean? Euro USD, I'm only taking buys above 1.22. Back up to target these highs. Alright, everybody. Oh, Britain's Prince William just got his vaccine. Maybe this will be a bullish confirm for GJ. Imagine it melts instead. Yo, everybody. I gotta really go to the washroom. Been drinking too much water, working out too much, digestive system on crazy. Okay? I'm just gonna go to the washroom quickly. London session just opened up. Don't be hyenas. Relax. Be patient. There's no trade confirms for any trades right now. It would be forcing a trade in technical ranges. Remember, as manual traders, you have to keep your emotions and discipline in check and have a long-term vision rather than chasing short-term satisfaction. Marketers only chase short-term satisfaction. That's why they always need to buy a new shirt, always need to buy a new belt, always need to drink something, smoke something, always need to fucking do something impulsive to fill their little dopamine urge. That's why all the marketers are garbage traders. They got no emotional control. It's common sense, right? What there goes hand in hand. But us, we're patient. Do you guys know how lions hunt? Lions conserve their energy, they plan their attacks, and they hunt at select times during the day when they have the advantage and the better risk versus reward over their opponent and prey. Then they spend the rest of the day resting and eating that meat. No homo, that sounded pretty gay. Eating the fucking animal meat. But even though I joke around and call you guys hyenas and vultures, you don't want to hunt and trade like a hyena or vulture. Going after dopamine hits, short-term satisfaction, trying to double and triple and flip your accounts without having unrealistic expectations. Do you understand? I'm gonna go to the washroom quickly, then we're gonna be waiting for our trade confirms. Everybody, please like and subscribe. Us real traders and guys who give value never get the credit we deserve. I don't want to buy fake followers. You know what I mean? Like and subscribe. Fuck those guys. Fuck those guys. Ted's just giving them a bit of free publicity. Fuck them, man. We're here to talk about the market. Do you guys not just see the information I gave you on gold? That was I'm not fucking lying to you. That was professional economist grade analysis that I broke down into retard level. So please appreciate that. While I go to the washroom, go watch that again. Let me go to the washroom though. What's up, gang? All right. So GJ, obviously no confirms. We're not entering anything. What are you guys telling me to do? Go to JP. Fam, fuck JP Savage. I massacred this man. I massacred Daniel and JP Savage. Dislike their fucking stream, bro. They got 200. I already disliked it. They got 200 people watching. I massacred these mans. I massacred Daniel. You guys see the fucking video I made on him? Tell them right now, Jeeve massacred you. You guys can't even show trades. They don't show trades. They don't do anything except for FTO. This fat face bitch. Look at this fat face bitch, bro. Yeah, wipe your nose, bro. Fat nose bitch. Look at these dumb motherfuckers, bro. Look at these retards, bro. Par Savage. AB Savage. Fucking dumb retards, bro. Everybody on here dislike the stream right now, or I'm fucking signing off. You guys want me to come watch? Dislike the stream right now, or I'm signing off. Let's get it to 300 dislikes right now. I massacred these clowns. Tell them I cut JP's signal clients in half. He went from 1,300 clients to fucking 500. I exposed JP's fucking Daniel's fucking signal shit. I exposed JP's fucking FTMO scam. They're done. That's why Daniel backstabbed Raja when he used to suck Raja's dick. These guys got massacred. These guys got massacred. They've been in this fucking trade since 1 a.m. for no reason, forcing a trade. For no reason. They got fucking massacred. Just search JP retard Savage. 300 dislikes, 280, 289, get those up. All they're trying to do right now is pool people into their funding program. That's it. We cut the, look at this. These guys have 100,000 Instagram followers, 50,000 Instagram followers, 250 people watching their free stream. I don't even have Instagram anymore. I have no clout. I do no marketing. These guys are fucking retards, bro. They don't know anything fundamentally. They don't know anything technically. They just know fibs and support and resistance. Daniel's a bald-headed fucking little gimp. 3 more and I close it. If you guys want me to close the stream, 3 more. More dislikes than viewers. There we go. Alright, cool. Alright, let's go back, alright. Alright, so... Alright, GJ's just ranging. We're not entering anything on gold yet, as it didn't break above our key level, and we could just enter back in this range. GJ, we're only taking buys above 154.200. GU, we're only taking buys above 41500 on the 1 minute. Euro USD, we're taking buys if we come above 1.22. USDCAD, we're going to do analysis on right now. All right, let's focus, reset, focus. Reset, focus right now. Reset, focus again. Emotional control, emotional control. Whoosa. Reset. Oh, man, these guys get me heated, bro. Chubby, fucking low testosterone losers, bro. Bro, who said stop spreading negative energy and you're trying to trade the financial markets? Get out of my chat, you bum bitch. I hate people who talk about negative, positive energy. Negative energy. Nobody's taking sells on anything or buys on anything yet. Oza, you fucking retard either. Oh, man. You know what? I don't want to roast the hyenas too much. You guys, some of you guys are new here. Some of you guys are new here. Let's go back. Let's reset. Let's go to our UCAD analysis. Let's see who remembers the fundamentals and technicals, all right? What do we have here instead? It's only 15 minutes into London Open. No rush. We got to be patient. London has been primarily ranging for the last couple of weeks. It's been a lot slower. You don't want to rush and force trades that aren't there without the confirms. Right? What do we have going on here? Is it a risk currency against a safe haven, or is it the other way around? So on all of our risk currencies against safe haven currencies, we saw that for 8 months since the Federal Reserve or central bank support, we've seen this continued bullish market structure essentially, right? Another way to confirm our fundamental concepts and what we teach in Capital Hungry is you have your safe haven currency first, and then you have your risk currency second. So you've had bearish market structure instead here on a pair like UCAD, where yes, you get some aggressive bounces, but you have sellers continuously print new lows, which we've seen even here now. So when we're looking at structure, just like we were looking at on GJ, just like we were looking at on GU, what phase are we currently in right now potentially? When you're looking at UCAD right now, what have you had sellers do with the safe haven against the risk currency? First, you can understand that you've had sellers print new lower lows, showing us bearish market structure on the macro perspective and higher time frames is still very much intact because they just printed new lows. Every time you have a potential new low at a higher time frame interest point printed, you have a higher probability of a consolidation or a pullback phase. This is simply the sellers in the market taking profit out. Understand? So right now with UCAD, we have to be very cautious as we enter this consolidation stage because we do have the potential we could pull back to revisit previous lows and still be very, very bearish in overall market structure. Understood? So now when I'm looking at UCAD more on the intraday time frames here, I'd only be looking for sells as we've had this low printed in this corrective pullback structure. If we can cleanly break, if we have continued US dollar strength, US dollar weakness when we look at the dollar index, if we break this bullish corrective structure, which was just profit taking by sellers from a new low printed, if we have continued bullish crude oil, where crude oil being bullish is a positive bullish confirm for the Canadian dollar because one of Canada's main revenue sources is exporting oil from the Alberta oil sands. So the higher priced crude oil per barrel, the more revenue Canada brings in, and investors digest that as a positive confirm for Canadian dollar strength. So when crude oil is bullish with market optimism as well, for those of you who don't know, crude oil, one of the reasons it's been so bullish after the pandemic priced in is because we've had demand start to increase and supply regulate as countries like China and India started to open their economies back up and their consumption of oil went through the roof. One of the reasons oil crashed was because we had that pandemic and lockdown, and you had billions of cars off the road. You had thousands of companies and industries that use and process oil or use oil within their industry or machinery shut down and closed off. So you had the demand of oil heavily decreased, but the supply heavily increased. So you had an over storage of oil, an oversupply of oil, but a decreased demand with the lockdown. So oil crashed and went to record lows. But as the economy started to open back up and we had the vaccines and the support of the central banks, then oil demand and consumption increased and supply started to regulate. And that's why it's back above $60 a barrel right now. If we have continued Middle Eastern tensions, this is also a bullish confirm for oil fundamentally, because investors start to price in the risk of oil refineries and like being bombed or being destroyed, and supply in the Middle East having more risk to it. You can read and learn about all this in the Capital Hungry Gold and oil webinars as well. But when oil is bullish, that's why it can help Canadian dollar strength. So if we have continued bullish crude oil, a break below 2095, then I'd be looking for sells on US dollar against the Canadian dollar. Okay? So we're going to keep an eye on USDCAD. We do have some minor bear structure forming, but I'd mainly be looking for the sells if we came below 2094. I'm going to keep an eye on EU as well, because we still have that US dollar weakness here. When we just look at the Japanese yen and US dollar, we still have the dollar just doing a pullback from the lows with potential to go and revisit these lows and be bearish, which would give us more confirms for our potential GU buys, Euro USD buys, and UCAD sells. Okay? Gold we're not touching right now. It's in a range and indecision point. GJ's ranging, no point forcing a trade. GU, no point forcing a trade, no clean confirms. Euro USD potentially if we break above 1.22. USD CAD if we break below 2095 and we have continued dollar weakness. For everybody who wants to rewatch the webinar, we went through analysis on gold, GJ, GU, Euro USD, and USD CAD. Now we're going to be waiting for price to come to those areas of interest so we can look for execution confirms based on lower time frame price action. If we don't get price to the areas of interest we need it to, we're not forcing any trades or executing any trades. If we do come there, then we're going to start looking at 1 minute price action for entries. Now, when we're looking at some of our reactive headlines, keep in mind, it's a pretty quiet night. We don't really have any economic events. We've had a lot of impulsive upside movements during New York in the last couple of days. We don't have any economic events now till New York session with at 8:30 U.S. initial jobless claims, and then also the U.S. Philadelphia Fed Manufacturing Index. When we're looking at our news terminal here to the left, it's been fairly quiet so far, 30 minutes coming into 30 minutes of London session, where we've had continued headlines about vaccine administrations in China. Britain's Prince William gets his first dose of the COVID-19 vaccine. We're having some trade talks between the UK and US, as well as the Euro in US. And that's about it so far. So far, news has been fairly pretty quiet. Market volatility and volume has been fairly quiet. So remember, as a manual trader and as a manual retail trader, you want to do your analysis first ahead of time, then develop the confirms you're looking for and the rules you're looking for to enter. We've already done that, right? Then you want to patiently wait for price to come to your execution points. An issue that has happened to me in the past and to others is as you're mindlessly watching the charts, if you're not keeping your mind active, reading the news, reading something else while you're waiting for your price points of interest, you can end up forcing a trade that's not there, trying to just looking at price action for no reason. Increasing your chart hours and increasing your experience does not come from mindlessly staring at the chart. It comes from reading and understanding the fundamentals of the market, and it comes from back testing price action, as well as doing analysis in the markets. You know? Those guys don't know anything. Sadly, those guys are just pure marketers who take advantage of new traders who have false expectations. But I've done a webinar to help people with the psychology side and all that. All right. So quiet night so far. We're not going to be forcing any trades. Gold, there's no entry points yet. We're just having a rejection at 1876. And we're coming back into this consolidation zone. Yeah. So now, just so we don't mindlessly waste time and force trades that aren't there, as the markets look like they're primarily ranging with less economic data, less news volatility, and after having such impulsive moves during New York, if you guys want to send me charts, if you guys want to send me TradingView charts, institutions are in summertime. What? Institutions are in summertime? Who said that? That's fucking retarded. Summertime? Fam, markets are moving 24/7. Fam, these guys have no fucking clue. These guys got no clue about institutions, institutional order flow. Capital Hungry, we actually pay $20,000 a year for data terminals. This is just Asian spots. Remember, banks don't actually trade currency pairs. Banks respectively trade the individual currencies primarily against the US dollar. Okay? Here you can see just through Asian spots, every single currency listed with the bid and ask price constantly being updated every single second by institutions around the world, high frequency trading across different locations around the world, around the fucking clock. We cannot trade like banks because we do not have the resources, manpower, technology, or capital to do so. We will never know how banks trade on their high frequency trading perspective because they have teams and teams of mathematicians, engineers, programmers, and developers constantly making trading algorithms based on mathematical equations, scientific market data, and tons of other sentiment and behavioral factors. Banks both trade on a higher time frame contract basis from a positional perspective, as well as pay billions of dollars for the best supercomputers, networks, university graduates to make sure their financial systems are constantly moving 24/7. JP Morgan, Barclays, Bank of New Zealand, Westpac, Emirates. Every single second, different locations around the world. Hong Kong, New York City, London, Moscow. Within the same minute, constantly updating their bid and ask prices. All right? JP guys, these guys are FTMO demo fucking losers. Why is anybody who's a self-proclaimed millionaire and baller using a funded account? Need funding. These guys are fucking losers. Get what I'm saying? This is from the Reuters terminal, Icon terminal. This terminal costs $20,000 a year USD. We don't use this information here. It's impossible to use. I'm just trying to give you guys a reference point that we do not have the resources, manpower, capital, technology to understand how banks are trading or what they're trading or why they're trading it the way they are. It's all high frequency trading based and also long-term contract based, bank to bank deals, bank to hedge fund deals, central bank to bank deals. It goes from the central bank all the way down to the mainstream banks, to the corporations, and down the line. You guys should watch some central bank documentaries, Princes of the Yen, if you guys haven't seen that yet. But nowadays, bank trading is all automated and based on technology, based on the fastest technology best technology, etc., etc. All right. So anybody who says they trade like a bank, any retail trader who says they got a bank algo, they got a banker making their algo, it's lies. I've been showing you guys my trades from 2019 from penny lots to making 20K in a week now. I've been showing you guys analysis from start to finish. News, fundamentals, technicals, trial and error, the reality of the trading psychology, how difficult this game is. Key levels, but also preset price sensitivity areas depending on market structure retest or like order blocks. You know what I mean? So adapt accordingly if we have nice order blocks for them that we want to use to our advantage, or we get a retest to like bullish market structure, and obviously key levels too. When you have certain price points that you're looking to enter at, you're creating rules and control around your trading. Okay? The reason 99% of traders lose is because they constantly stress and waste their energy, time, and effort on all the things in the market that they can't control. The market's ranging. Oh, the market's slow. Oh, the broker went against me. Oh, it spiked me out. Oh, it went to my stop loss. It was manipulation. Constantly complaining, constantly making excuses, not taking accountability or their responsibility for their lack of knowledge and effort. You understand? It's a sad, sad world nowadays, man. It really discourages me from like wanting to keep doing this stuff and sharing value, because nobody wants to really learn and put that time and effort in anymore. That's why within Capital Hungry private channel, with all of you guys who follow my free resources, Twitter, Telegram, YouTube, I want everybody to be in the best physical shape they can be. I want everybody to not depend on any external substances the best they can. I want people to improve their mental health. I want people to fuel their body better with the nutrients and energy that it needs. And I want all of this to work hand in hand to increase your discipline, character, and patience to make you a better trader in the markets too. So we become smarter, better, and keep leveling up financially, physically, emotionally, spiritually, mentally, and go to our absolute peak until the day we fucking die. Because the only thing promised to us is death. So you can use that as you want and see the doom and gloom side and waste your life away living a mediocre life, or you can push yourself to the absolute fucking limit. You can try to go Super Saiyan to the best of your abilities. I was working at the bank 12-hour shifts, rotations, commuting 2 hours, still starting Capital Hungry, still trading, still going through that trial and error, still putting 8 hours a day into the markets or longer for 4 years. Don't worry about crypto and stuff like that. I know we're seeing some headlines, crypto is recovering, but I still think it's going to get a dump. Yeah, I worked at RBC for 4 years. So we're getting some more China vaccines that can potentially tackle the India variant. And Bitcoin and Ethereum are correcting some of their downside move, going back to 40.8. I'm still not trusting Bitcoin. I think they're just letting people load in from this dip, and they're gonna dump it further down still, in my opinion. You guys have to understand. All right, let's talk about crypto here, because we still don't have any trade ideas set up or the confirms we need. Every single trading instrument or asset class goes through the same historical repetition and cycle. Before regulations and when it's an emerging market, you have people pool into it based on the idea and the innovation that can come from it. At the end of the day, people are pooling into crypto because of blockchain, decentralized finance, and thinking that it's going to replace gold and real world money. All right? But that's not the case. You would have to have the central banks adopt those same cryptos and use them within their operations and economic infrastructure to have that. What you had is crypto finally go through its correction and crisis cycle that all trading instruments and asset classes go to. And all this is the whales fishing out the krill and clearing out the middle class and the mainstream 99% retards who FOMO in and pushing price down to more favorable bargain prices for them to get in. Crypto has not been regulated until this point coming up, where the Federal Reserve and Main Street banks are making crypto indexes. Dow Jones Bitcoin Index, S&P Crypto Index. That means as mainstream indexes around crypto and Bitcoin are coming out, which is going to be regulated and controlled by the feds and by mainstream banks, they wanted to bring price down to more favorable prices for them to get into, while clearing out the liquidity of the 99% that have been FOMOing in based on hype. I still think Bitcoin could drop to 20, 25K for banks and Main Street banks to get in at much better prices. Crypto already is being regulated, Nick. You guys are sadly retards. I'm sorry to say, you guys just have no clue. What's this headline say? Who controls the S&P 500? Who controls the Dow Jones? Who controls the NASDAQ in the stock markets? What's this say? S&P Dow Jones indexes, new index series, Bitcoin index, Ethereum index, S&P crypto mega cap index, May 4th. This was my first sign of Bitcoin major sells on crypto coming. This is confirms of regulations coming to crypto markets. You cannot be that stupid. S&P, just like the S&P 500 or the Dow Jones, the US indexes who are controlled by who? You guys can talk based on opinions and guessing games, but at the end of the day, we bring facts to the table. You can just read this news headline here from May 4th. This was the first sign of regulations. 2,008 people, 800 people I showed it to. As an investment vehicle, just like anything else. As a way to move money, make money. What do you mean, why would it be useful once regulated? Central banks are already adopting blockchain and crypto technology with their own digital dollars and central bank digital currencies. You guys are so... Even the crypto people who think they're smart are so fucking stupid. No clue about economics. No clue. Gold isn't controlled. Henry, you fucking retard. You guys are so stupid. Central banks are already replacing cash money with their own central bank digital currencies. That's going to be the exact same thing as paper money, except audited and under their control and using blockchain crypto technology. As they transition into that, they're also going to be regulating overall crypto markets with trillions of dollars pooled in there as an investment vehicle. So when you see S&P Dow Jones, which is in stock market indexes, new indexes series including S&P, Bitcoin, Ethereum, and crypto mega cap are coming out. What's that mean to you guys? Why do you think I called the Big Short? I got a hairy chest. Why do you think I called the Big Short May 14th? I'm doing a big short on Bitcoin if we don't break above 60K, Michael Burry style. Most of you guys don't even know who Michael Burry is. You guys don't even know who this is. You guys know Q Banks, but you don't know Michael Burry. You guys don't even know who he is. Real market legends. It says Christian Bale. It's not just a Big Short movie, man. But yeah, May 14th. based on this headline and other data that was coming out. It doesn't matter if it's cryptos, doesn't matter if it's commodities, doesn't matter if it's stocks. Capital hungry OGs, have we not called major Middle Eastern conflict and massive gold bull runs that we've taken advantage of and fear for gold? Have we not called oil crashes? Have we not called stock market crashes? Have we not called the Bitcoin crypto crash ahead of time? How many warnings did I give you guys? How many warnings or trades for that did I give you guys? Short, Bitcoin short, crypto short. It's going to be regulated. There's too many. You guys want to know another signal? May 18th, Bitcoin buys was the most crowded trade of investors. Bitcoin buys, long Bitcoin, is the most crowded trade. Well, not anymore. Before it crashed, Bitcoin buys was the most crowded trade, being in a bubble. Bank of America. It was the most crowded trade. Everybody was in Bitcoin buys. Everyone and their grandmother was in crypto buys. Use your fucking brain. What do you guys think is gonna happen? The whales are gonna go, hell yeah. Don't worry, Granny Jenkins. Go make $1 million on Dogecoin. Go follow Elon Musk. Yeah, Doge to the moon, Bitcoin to the moon. No, you fucking retards. It's called a trap. It's called a trap. It was a trap. You think the central bankers who control the money, the mainstream bankers, the 1% who control the 99%, you really think they're gonna let all these random nobodies? Fucking Meek Mill was getting into crypto. Meek Mill said, "What's this crypto stuff about? Let me get into Doge." Meek fucking Mill. Everybody was getting into it. That's a signal to us who are involved in the financial markets that something's not right. And at the same time, everybody's getting into it. It's the most crowded trade. And at the same time, new indexes are coming out. Yeah, bro, my dad got out at 60K. He took my advice. He took my advice. I was telling everybody for the longest time, watch out. There's too many people in Bitcoin and crypto buys. It's getting too much on the mainstream social media. Now there's regulations coming out. And mainstream banks and central banks are going to clear out all that liquidity of every single Karen and Darren. Sorry, Darren, my boy. It just rhymed. Darren's my boy in the chat. But every single Karen, Tom, Dick, and Harry, and they clear them out. What did you guys see happen when crypto crashed? Binance, Kraken, all the crypto exchanges shut down, weren't letting people withdraw, weren't letting people deposit, weren't letting them close positions, exit positions. No. And guess what? Every 10 to 15 years, there's a major correction on every trading instrument, on the overall trend it's going into. Cryptos just hit their decade mainstream trend. And what do crypto heads say to support crypto? Fucking blockchain, bro. Put it on the blockchain, bro. It'll solve your issues. You got cancer? Put it on the blockchain. It's decentralized finance, bro. It's decentralized finance, man. It's blockchain protected, bro. Nobody can touch it. Banks can't touch it. They can't. Well, then I go to him. I go, hey, how'd you buy the crypto? Oh, I put US dollars into a wallet. Then I bought it for crypto. Oh, how do you exchange it out and profit? Well, I got to convert it back to US dollars. Oh, okay then. Fucking blockchain, man. I'm like, why do you guys think crypto is still going to go up? Blockchain. Duh. Put it on the block. Add another chain. The chain changes. Nobody can touch that chain again. Another block comes in. They say the same stupid shit. They don't fucking say anything. They don't have any economic history, data. They don't say anything. They just say HODL, blockchain, and decentralized finance. That's all they fucking say, man. I'm sorry to say. You gotta that's all they say. HODL strong, boys. As Tesla fucked everybody. Tesla, Tesla and Elon didn't hold through that crash. You guys really think Tesla and Elon? You guys see Tesla's tweet with the diamond hands shit, where he said Tesla has diamond hands. You guys really think Elon, knowing how the market and world works, being the biggest billionaire in the world, you really think he held that crash on cryptos? Fuck no. He helped pull in all the mainstream idiots. Dogecoin to the moon, Bitcoin to the moon, saying Tesla will accept Bitcoin, Tesla will accept Doge. He helped pull everybody in. He helped push it up. He cashed out at the top, fam, with the banks and central banks. He was just helping pull everyone in before the regulations. Straight. How can you trust a billionaire? He has an agenda himself. He doesn't give a fuck about people. People just see him as cool because he's known like as our modern day Iron Man. Elon's a fucking evil genius. 10 years from now, Elon's gonna go to Mars and he's gonna fucking fire back some radiation beam on Earth and fucking destroy everybody. And then you guys will say, fuck G, we should have listened to you. This guy doesn't care about humans. He thinks he's above other humans. He's getting to a Mark Zuckerberg point where they think they're like above humans. You get what I'm saying? Like, oh, look at these animals and these fucking aliens. Trust me. These guys like Bill Gates, Zuckerberg, they get a god complex. Exactly, they get a god complex. They think they control it. They think they're gods. You really think Elon held that crash? $30,000 crash on Bitcoin, he held it? Come on, guys. He helped push it up, pull everybody in. He cashed the fuck out. You know what I mean? Tonight's a shitty ass London session, eh? Ranging markets across the board. Euro USD here. Let's look at EU for potential scalp entries. If we get a bullish close above these candle bodies, I'm gonna be looking for an EU scalp buy, and I'm gonna look for an entry if we get a bullish close above. And as long as we get a bullish close above on the 1 minute, I don't want the next candle to engulf that push. If the next candle engulfs the push, I'm getting out. But other than that, markets are very, very slow tonight. All right, not really many confirms yet. I've been chugging back water. Yeah, all that anger. I gotta go to the washroom, man. I warned everybody about this in my Telegram. I told everybody about the Middle Eastern conflict last year. I told everybody that there's going to be some catalyst to cause a market crash 2020. I thought it was going to be the war on Iran, but instead it was a pandemic. You know what I mean? I told everybody about the stock market crash, gold going to the moon in the corrections. Told everybody about the fucking oil crash, Bitcoin crash ahead of time. You know what I mean? If you guys want to send me charts and ask questions, okay, markets are very slow. Let's use our time effectively as we have new hourly candles in 12 minutes. We don't have confirms to enter on any trades. Markets are ranging. We're not going to be retards and force a trade here. I'm going to go to the washroom, come back. You guys ask me any questions you want and send any charts you want. We'll do chart reviews for a bit. And if we don't get any setups over the next 30 minutes, we're going to call it a night because it's very, very slow. Don't forget, I gave you guys a ton of information and analysis about overall investing principles, market structure, fundamentals across the board. You guys, if you rewatch this stream, you will learn a lot if you take notes. EU didn't give us buy confirms. We didn't want to enter there. We're starting to look at it, but we didn't get the bullish confirms above these candle bodies for an entry. Gold is just ranging. We're waiting for above 1876. GJ's disgusting price action. Terrible. UCAD just ranging as well. Don't just mindlessly stare at the charts. I'll be back, all right? 5 minutes. Make sure you guys like and subscribe. I've had a lot of family shit going on, and I'm usually busy with the private channel. Because in the private channel, we do these London trading sessions every day. We do market update webinars during Asian or New York. We got the news terminal for the private chat. We got other members sharing their analysis as well. We do our weekly recap, but we do so much shit in the private channels. Too much to talk about. I know you guys keep asking about it. Key level price alerts, session reminders, price monitor tool, news updates, other members' analysis and information and ideas as well. My analysis, trading webinars we do. It's tons and tons of stuff. Banter chats always popping off. Sakim's been going hard. Sakim's been going hard with all of his updates and market sentiment stuff as well. He's been going hard. You gotta respect that. See? Bitcoin short 4,000. Thank you. You're welcome. 44K down 38.7 on a 0.07. But he doubled his account. No clickbait. Just following the big short. That's a fucking good one, Carl. It was really hanging on by that handle. Elon got everybody on it. And he jumped out. Capital Hungry, they get a crypto newsroom as well. They get the economic newsroom, they get a crypto newsroom, they get the trade session, the Capital Hungry trade room. They get the main feed. Like I already gave these guys a market update webinar at 7 p.m. Eastern so they knew what to look for. You know what I mean? Capital Hungry is just way too much information. It's not like a signal chat. It's not like a cookie cutter course. Markets are super slow right now. That's why we didn't force anything. Fam, JP's stream was dog shit, guys. Let's be honest. Capital Hungry private members also get access to these 50 educational webinars that aren't on my YouTube. Most of the Capital Hungry members don't actually go through this because they think they're Jimmy Neutrons and they think they're smarter than me. But I try to tell them to go through these educational webinars. Psychology webinars, fundamentals and technicals, trader's brain, candle bodies, trends, market sentiment, psychology, market structure, scalping, lower time frames, higher time frames, core principles, market sentiment, measuring economic impact, pricing in concept, economic data. You guys can read the titles here yourself, yo. Read the titles and tell me how much you will learn. All of these are hour, 30 minutes, 2 hours long. I'm just going to scroll down slowly and read the titles and tell me if you've seen these in any other course. The CH Webinar Vault. You guys can't get access to it if you put that link in. Tell me if any of the course you've seen this type of these titles. Economic data reports, measuring economic impact, tools to read market sentiment, how and why to do top-down analysis, market environments, correlations, seasonality, historical analysis, central banks, gold, oil, transfer of wealth, recession, corruption, my banter talks on Iran stuff, Middle Eastern tensions, everything. All right. GJ ranging. GU ranging, EU no confirms yet, gold no confirms yet, headlines are quiet, no economic events overnight. I'll be right back. All right, everybody. New hourly candles here. Gold still had a nice bullish candle close, but we need price point above our key level to safely take those buys. GJ ranging, disgusting. We're not going to stress out and force any trades there. That'd just be stupid. GU, no clean confirms above our next zone area we want for safer buys. Euro USD, let's take a look here. Sorry, my mic was messed up. Euro USD doesn't look good to me yet either. You can see this upside move just looked like it was making the hourly upper wick, and it got instantly corrected in the same amount of candles. I would need more of a support at 1.22 to take safer buys. This London session is looking pretty weak, to be honest with you guys. Tonight's looking like a no trade night so far over the last 2 hours that we've been watching through pre-London and London session volume. We did analysis across these pairs, but we did not get any confirms at our execution points. We don't want to stress out and force trades on GJ without confirms. And obviously on the other pairs, we've just been ranging on the lower time frames as we had a lot of impulsive moves the previous days during New York sessions. All right. So pretty much, I gave a lot of information on safe haven currencies, fundamentals, market structure, buyers and sellers transactions at the start of this webinar. A lot of information. If you guys rewatch this and take notes, you will get a lot of information. So right now, I'm just gonna spend some time looking at people's charts and reviewing analysis. Yeah. So I'm just going to see the price action though wasn't looking clean for me in terms of the bullish push and the correction that it had and the weaker bullish candles here. You know what I mean? But I'm going to be looking at some charts, and tonight is a no trade night. No wins, no losses, no break even, just no positions at all. Sometimes the best position in the market is no position. We don't get paid based on our times like a 9 to 5. We get paid based on our skill set, knowledge, experience, and being able to spot opportunities and take advantage of them when they are present and following our preset analysis. Okay? Yeah, sure. I'm going to check out charts right now for the next 10-15 minutes, and then I'm going to end this stream and go to sleep myself. And private chat, I'll probably wake up a bit earlier to send like a New York market update again. And then obviously we have our London session on Friday to close the week. That's an Indian dish called saag. It's just pretty much a vegetable puree with like kale, spinach, and other dark green vegetables that's made into a pretty much a puree with other spices, and it's just bomb, you know? It's an Indian dish though. Okay, GBPAUD. I personally do not trade this pair as it's a risk currency against a risk currency, but based on your analysis, I don't see enough information here. Is this a new high printed by buyers in overall bullish market structure? I can't really see enough information from what you're just showing me on this hourly chart, but if this is new highs printed by buyers and we still have continued GBP strength and optimism, if we break above 1.284, then I'd be looking for buys after breaking out of this corrective. On the hourly time frame here, if you stretch out your chart and you come to the peak highs, you can map out some corrective bearish pullback structure with a trend line accordingly that you're going to be able to see on like the 1 minute, 5 minute, and 15 minute time frame. Okay, this is the pullback and corrective structure coming from new highs printed by buyers. As long as we maintain what I'm guessing is the intraday bullish market structure, if you have a consolidation zone and a break out of this corrective structure, retest of 1.284 area, then I'd be looking for buys to target these previous highs and taking advantage of that range back to the upside, with these confirms needed with a break and retest on the intraday time frames. So I would need the bullish structure respected. I would need a double bottom or a consolidation zone showing me a slowdown of sellers pressure and sellers exhausting out of the market and exiting out of the market and buyers jumping in. I would need a break out of this corrective bear structure to signal more buyers momentum, and then the break and retest above your zone to give me enough confirms to target back to these highs. All right. GU, I just don't see good buys for a scalp in what we're looking for. Capital hungry members have been riding some buys from the support area based on our trade ideas webinar, but we haven't had any good real entries unless this hourly candle digs deeper to retest this support, then continues up, or we break above 21500. Then I'm looking to target 422. GBP USD, I like what you're seeing here on the lower time frames as you identified that consolidation zone, the bearish lower time frame structure. I don't really think you need all of these indicators, as all indicators are lagging behind, but if it helps give you confirms, then I get what you're trying to add for confluences. But other than that, this trade still looks pretty probable, and it's the same type of idea we're looking for, but we won't have confirms to extend it unless we break above 4150. So it's a good trade, the entry as well as your stop loss, because your stop loss is based on where your buy analysis would be invalid, meaning if we had a break below these 1 minute lows in price sensitivity area, we would dig a lot deeper. So why risk any more monetary loss? So I really like your stop loss placement and the idea where your entry is with the breakout of the structure here and breaking above those 1 minute highs. That's all great, but the price action and the volume and volatility overnight with London just hasn't been working in our favor. We've just been ranging pretty much up and down with messy price action. The trade idea still looks very valid though. I like your markup and dissection of the lower time frame here. Okay, gold, when was this? In the morning? During New York? I gotta close this in a bit. Okay, so first thing here, right? If this is this during New York, because this is NYSE open in the new 4-hour candle. Because I can't see the times here. Or is this from tonight while it's just ranging? We didn't go to 72 tonight though. Oh, here? This? Oh, why'd you rush a gold trade here in the middle of the range? It was just messing about here. You know what I mean? The hourly candle is pushing lower and close below. Oh, you did say it's a stupid loss. Yeah, I think you should have just been patient and waited for what we were looking for above 76. Gold is just doing this ranging up down move pretty much overnight and didn't really have much of a price change from Asian hours. You know? But fair point. All right, everybody. Okay, everybody. Markets have been slow. We didn't get to I didn't call any execution points as we didn't have any confirms, and it was a no trade night tonight. We have Asian session close in 45 minutes and the new 4-hour candles in 45 minutes. If you got, and I'm just exhausted too. EU actually, let's see what happens on EU here if this hourly candle ends up flipping bullish. But and gold if it breaks above 76 actually too. Let's see. But I'm exhausted and sleepy from being up since yesterday, obviously, and talking for 2 hours straight and sharing analysis. All the trade ideas and analysis given, it's still active through New York session, okay? Make sure you guys take the time and effort, avoid the marketers, go through all the capital hungry content. Yeah, I'm a bit under the weather as well with the weather changes in Canada here and still being locked down and stay at home order. So all these videos, free YouTube channel as well, free news Twitter, free news analysis channel. All the trade ideas, analysis, information given is still valid. Don't forget to rewatch. After this is saved and uploaded, comment on the stream itself for the algorithm. You know what I mean? So do me a favor, like, subscribe, and when this stream is saved in like 10 minutes, comment on the algorithm to help get it more views. I'm just exhausted here. And I personally wasn't going to be trading tonight anyways because I finished earlier. And I'm starving and sleepy now. Okay, everybody. I'll see you guys later. Yeah, I need some rest. I think I'm getting a fever. Thank you guys for the support and coming. EU looks like it's going to start to take off. Same with gold. If you guys are going to be looking at that. Gold above 76, EU pretty much where it's sitting now if we get the price action confirmed, but I gotta sleep. Yeah, Canada's still been locked down and stay at home order. And the weather's been crazy changing up and down.